Hello, it's Callum Newman from Markets Today, and I'm going to tell you about 5 different factors that I believe will support the US economy and the US markets over 2026. So there's a lot to get through, so let's get started. So the number one factor that I believe will support US markets and the US economy over 2026 is the AI capital expenditure boom. Now, you may have heard a lot about the valuations of AI firms on the US markets, but one thing cannot be denied, and they are spending a lot of money. So in 2026, they're projected to spend between $400 and $500 billion on everything they need to try and fulfill their AI ambition. Now, current AI spending boom compares with historic capex booms in US history, and that goes all the way back to the railroads in the 19th century, the post-World War II boom, the energy boom in the 1970s, and of course the telecommunications and internet boom of the 1990s. Now, those figures are around 1.5% of US GDP in 2026, and some funds suggest that could even go higher in future years. So if we look at a chart here from Vanguard, you can see that they've got the previous capex booms in US history, and they suggest that the AI spending is still in the early phase of this upswing, and I expect that growth outlook to support the US. All right. So the second factor I expect to support the US markets and the US economy in 2026 is the US federal deficit. Now, you may love him, you may hate him, but there's no doubt that Donald Trump likes spending money. So in his election campaign, he suggested that he was going to reduce the US deficit, and Elon Musk got involved, but that's all fizzled out, and the US deficit is on track to be over $2 trillion this year. That's around 6% of GDP. That's a very high level against historical norms. Now, you may have seen a tweet too recently from Donald Trump that he wants to expand the US military budget by 50% to take it to $1.5 trillion. Now, whether he gets that, I'm not sure, but as long as that US deficit continues to rise, that supports the US economy, and a lot of that spending shows up as US corporate profits. So the ongoing expansion of the US federal deficit is another strong factor for the US economy in 2026. Right, the third factor to support the US markets in 2026 is the strong credit growth going on right now. Now, we're in January 2026, so the US banks are reporting their fourth quarter results. So that's the last 3 months of the 2025 calendar year. Now, they are reporting very strong lending growth. So JP Morgan, as one example, expanded lending by 9% year over year. That's a very high rate of growth. So the US money supply is expanding. So all that lending drives spending and investment across the private sector that expands the US economy. So growing money supply is very bullish for the US. And if you look at the chart here of the US bank index, it's gone up consistently over 2025 and is likely to keep rising. If the markets foresaw a US downturn coming, that chart would likely be going down. So while US banks are in an uptrend and reporting strong results, I expect credit growth in the US to remain strong. Right, the fourth factor to support the US in 2026 is lower interest rates. Now, as we know, the Federal Reserve sets the short-term rates, and at the moment, the markets are pricing in an 80% probability that those will fall between 0.25 and 0.75 basis points over 2026. And of course, we know that the US president is a major proponent of lower interest rates, and he's putting a lot of pressure on the central bank to do that. There's a new chairman due by May 2026, and markets expecting what they call a dovish chairman to take control, and Trump will likely get his wish. So, of course, lower rates help US consumers, US home buyers, and supports the US economy as that extra spending power flows through. Right, the final factor I expect to support the US markets and the US economy in 2026 is lower energy costs. I don't know if you've checked the price of oil lately, but oil was down 20% over 2025. And if you look at the chart here of the West Texas benchmark, which is applicable to the domestic US market, you can see it's still in an overall downtrend. We also know that Donald Trump executed, if you like, the operation in Venezuela. So those barrels of production were previously going to China. They're now going to be rerouted, as they say in the US, to the Gulf Coast. And that will help the US refiners feed those extra barrels into the domestic US market. So that's lower gas prices, as they say in America, or petrol prices for the US consumer. And we've also got this quote here from the AFR, which shows that US gas is being exported around the world and it's helped bringing down LNG prices in Asia. Of course, that's very important for countries like Japan and Taiwan and China. So lower energy in 2026 is another supportive factor for the global economy and asset markets in general. It keeps inflation contained and it keeps interest rates down. So there we have it. There's 5 different factors that should support the US economy in 2026. It's the leader for global growth. Of course, the markets are volatile, they're unpredictable. We can get black swans, as they say, or these could change. But as of right now, I'm expecting the US economy to be solid over the next year. And of course, that means Australia should be fairly solid because it tees off global growth and Chinese growth as well. And that means we could be looking for opportunities on the ASX and in the US markets to try and make a profit. So I hope this video has been beneficial. If you liked it, give it a thumbs up, leave a comment if you've got your own bullish factors, or if you don't agree, and we'll address those in another video maybe. Thank you for your time.
Welcome to the Marcus Today video series on the Marcus Today principles. We operate as a team looking after money. And in order to operate effectively, we've worked out that what we have to do is to write down how we do it. And we've adopted a Ray Dalio style. If you know him, he's a famous hedge fund manager. A Ray Dalio style of writing down what we call principles. And as a team, if we write them down, we can all look at them, share them, discuss them, evolve them. And this mini series is going to give you some of our basic principles, which you can adopt yourself and should help you with your own investments. Here we go, the Marcus Today video series on the Marcus Today principles.